So, has anybody not seen something like this before? A profit and loss statement. Has anybody not seen that? You haven't, Tracy. Okay, so just roughly the structure of it. If you follow it, can you see turnover is sales, cost of sales, in your case, would be the cost of the paper. Yeah?
Yep.
And the gross profit is the margin you're making.
Yep.
You've got various costs, including some other operating income in this case. That is your profit there, what we would conventionally call earnings. And it's that on which the basis of the valuation of a company might be based. So really the profitability, the raw profitability of a company before it's paid any tax. Yeah?
Mm-hmm.
And that £38,000 is the amount of money that it has made net in the year. This is a balance sheet, and this is a statement not of a flow of income, flow of expenditure. This is a statement of the value of a firm at the end of the year, at the end of the previous year and at the end of the year in question. And the key thing to realise is that the net assets here, which is the net value, the break-up value of your business, is the same as the net assets stood at the end of the previous year plus that profit. So do you see that £38,000 added to the amount of the firm's value at the end of the previous year comes to the comes to the value of the firm at the end of the current year. The key thing to realise is 38 plus 7 equals 45. Does that roughly flow? Now to break this down a bit more, a balance sheet is just a statement of what you own at the end of the year less what you owe. So it's all it is a statement of the money you've got in the bank, the money that people owe you, less the amount that you owe principally to the tax, perhaps in the case of a trading firm, to your suppliers. And the difference here, this net assets figure, is the break-up value of everything, assuming you were to sell everything pound for pound of what you could. So the things you typically have in your balance sheet, the things you own at the end of the year, are a little bit for some computers, which haven't yet been valued down. We've got some stock. Okay, so this is quite a stock-dependent business. You can see that, can't you? £170,000 worth of stock. It's quite a lot of stock. Some money owed to the firm, that is debtors, so those are customers that haven't paid us yet. There's some cash in the bank account. Add all of that up, £230,000, and then there's some money we owe. And although I haven't given you a breakdown, that amount that we owe there, £12,000, is principally to VAT and corporation tax. And then also, we've got this heavy investment here, amount due after 1 year. Right. Does everybody get that roughly? The amounts that are owed, the amounts that are owned at the top, amounts owed at the bottom. Difference. This is quite heavy maths for accountants, right? Because this is involving subtraction. So you've got all of the things you own at the top minus the things you owe, and then that figure there, the net, so that involves that complicated thing, subtraction. That is the difference, and the difference is the result of the profit being added to the value that it stood at the end of last year. Now, I fuss over this because this is actually a report which is not easy to reproduce in many of the other softwares you might think. So you might think, for example, of using QuickBooks, you might think of producing Sage, but it's actually not possible to run this report. You could run a 1 year report of a balance sheet, but you can't get a comparison. So you can't really think if you're using Sage, and these are mainstream products, using QuickBooks, you can't really think like an accountant does. An accountant's thinking, how much have we moved since last year? Does that stock figure from this year compare reasonably to the stock figure we had last year? As you can see, just by looking at it briefly, can you see? Stock's really grown, hasn't it? They've put an awful lot of value into their stock in 1 year. An extra £70,000. Are these figures roughly right? What on earth happened to the debtors? Everybody suddenly paid? And in fact, looking back at that stock figure, why is £170,000 such a high proportion of the turnover? Do you see these sort of questions arise? And they arise partly because you're looking at 2-column reports. You can't produce a 2-column report in QuickBooks. You can look at this year, there's no second column.